Thanks everyone for joining us. Today we'll be talking about Avalanche, how its current status right now, how it got here, the ecosystem, and next steps for Avalanche. A few pointers before we get started. We are recording this presentation, so if you're not able to stay for the whole duration, it will be published. If you want to share it, you can also share it afterwards. We'll be looking at questions through the chat, both myself and my team, throughout the presentation, and we'll have a more in-depth Q&A towards the end as well. For today, we'll start with a bit of an introduction of Avalanche, how it works, its consensus, how it differentiates from other smart contract platforms, and then the current status of Avalanche, diving through a lot of the metrics that we just recently released, and finally look at the ecosystem, some of the most noteworthy protocols within it. First, as per usual, a quick update about IntoTheBlock. In case you missed it, we launched a new site for where we talk about our institutional business. So IntoTheBlock.finance, where we dive into some of the overall, not too much of the specifics, but the overall picture of what we do with institutional partners in treasury management and risk management solutions there. We also updated the website itself, the one you access before the app. We're also making some modifications to the app that we hope to release soon. And of course, the main subject for the webinar, we did earlier this month launch Avalanche Analytics. So without further ado, let's get into it. First, a brief timeline of Avalanche. The project was conceived in 2019. In 2020, after some years of research, they did an ICO that ended up raising about $42 million for, I believe it was 5% of the AVAX supply, and at a price of $0.5, so 50 cents. This was back in July 2020. It's actually one of the few successful ICOs, not just in a price standpoint, but of course with the product that they've shipped. In terms of price, that it's up about 25 times. In terms of product, well, they built a whole ecosystem, which we'll get into. The chain itself, the main one, it's actually multiple chains. The C chain launched in September 2020. That's where most applications currently live on top of. In August 2021, as DeFi and the bull market started getting more traction, they announced the Avalanche Rush incentive program, which led to significant influx of both capital and new users into the ecosystem, just boosting that growth remarkably, as we'll see in a few slides. Even that was in August, and a few of those incentives are still lying around. They're doing extensions of others and new ones, but to a certain degree, those have died down. And in April 2022, they launched the first subnet, the P chain, on top of where subnets are built on top of. Launched earlier, and in April, I believe the DeFi Kingdoms launched one of the largest subnets to date. In terms of Avalanche, it's actually not a blockchain. So the architecture is set up as a directed acyclic graph, so a DAG. So you can think of it as a different, like a parallel type of architecture. So within distributed ledger technology, there are blockchains and there are DAGs. Those are like the two main. There are other architectures, and of course, blockchains are the household name. But this is a slightly different way of ordering transactions. So basically, you have a way to timestamp transactions while also ordering them partially in different sequences. So here, for instance, you can see that transaction A happened before B and C, but for instance, B and C took place at the same time, and then E took place later. So a lot of these are processed in parallel, while blocks, you can think of them as like multiple blocks being processed in parallel. Here they call them vertices. So each vertex contains a batch of transactions, and they are run in parallel in order to make the consensus more efficient. And it optimizes to be able to reach finality within seconds. And what finality means in this case is that you're able to have proof, mathematical proof, that the transaction won't be reverted within seconds. So the finality is one block, versus in other chains where oftentimes there are reorgs of multiple blocks that can lead to finality that's much longer. So in that case, the DAG architecture makes Avalanche significantly more efficient. It uses consensus, proof of stake for consensus. So they have validators set up, and each validator generates rewards on top of the AVAX that they stake. There's a minimum stake of 2,000 AVAX tokens worth around $25,000 at the time. Slightly less at the moment than ETH staking minimum if you want to do it yourself. There are about 1,250 validators running at this time. Throughput is significantly faster than several of the more established chains. So 4,500 transactions per second, quite fast and has large capacity. And finally, staking yield ranges between 7 to 11%, depending on how long you are willing to lock your AVAX tokens for. So essentially, it grows depending on the lock time that you set. And for instance, liquid staking solutions, for those that don't want to stake the full 2,000 AVAX or don't have that full amount, offers the 7%, I believe it's 7.3% yield through SAVAX, Penkeys liquid staking. So rough comparison, a lot of the smart contract platform chains at the moment use different versions of proof of stake, as you can see here. The requirement for a validator on Ethereum, as I mentioned, is 32 ETH, which is, I believe, around 40 to 50K at the moment. So twice as much as Avalanche at this time. It has a lot more validators. Also, though, there's a max amount you can validate. So the real number is expected to be lower, but it's also broadly believed, and there are other data points to show it, that it's more decentralized than some of the other smart contract platforms. The Ethereum has a dynamic fee burn mechanism, whereas, for instance, Avalanche burns a percentage of transactions fees are burned, which is 100% for a given specific transactions. BSC, Binance Smart Chain, as many might imagine, it's a lot more centralized, so only 21 validators that are set in stone at this time, at least, whereas Solana has about 1,400, Avalanche, as I mentioned, 1,200, and Algorand 1,500. So they're roughly in the same range. Avalanche and Algorand have similar transactions per second capacity, and Solana has a higher order of magnitude, I believe 20 to 50K transactions per second, though of course it has had some problems with the reliability of the network, oftentimes going down. So now I want to talk about the current state of Avalanche, looking at multiple of the most important metrics for anyone that wants to understand what's going on Avalanche and where it is at the moment. So following that robust growth in 2021, where of course it was quite reflexive, where price was going up, and they had incentive reward programs, which were it's themselves going up since they were in AVAX. So more and more users flooded, more capital came into the ecosystem. So it was very solid growth. It grew from literally $0 in TVL, total value locked, to about 12 billion within a year. And we're seeing now the contraction as prices, incentives, and users decrease. Users partially because of the incentives, also to another extent because of disinterest, I would say, in bear markets, which tends to happen. But we're seeing still, nonetheless, some longer-term positive developments, both from the architectural standpoint and also from the user standpoint. So for one of the key differentiators of Avalanche, which is a chain that, like Ethereum, is that it has significantly lower transaction fees. I have them displayed here in terms of AVAX, just to avoid price fluctuation. So even in AVAX terms, the transaction fees have been declining. So it's getting cheaper and cheaper to use. So following the Apricot upgrade phase 4, fees dropped by about 50 to 60%. Then as the activity on Avalanche carried on even later than after AVAX price had peaked, transactions continue to grow, and so we see transaction fees continue to increase a bit up until the Terra collapse. That, of course, weighed down on the whole industry and still has some effects of contagion. Avalanche had done also on top of this a treasury swap between Terra, Luna, and AVAX tokens. So that created a lot of FUD, I guess, and the AVAX price collapsed, I believe something like 90% in the second quarter. And following the reflexivity, and that also led to less interest in using its blockchain. So even though the transaction fees are relatively the same from where we started in the year, they're down 88% in USD terms, reflecting this price decline, of course. Total fees, as a matter of fact, have declined even more because transactions have dropped, while the fees in dollar terms have declined as well. So the amount of fees, which can be seen potentially as the revenue that it generates, that the Avalanche blockchain generates, has been declining significantly. So 50% in AVAX terms, 99% in USD. And as we can see, like it grew substantially following the incentive program. As the incentives carried on in Q1, they continued to increase, and then they plummeted in the second half of the year. In terms of Avalanche transactions, we see the same pattern. They're down 85% year to date. So somewhat, as I mentioned, less interest in using the blockchain. They still remain, however, roughly around the same point where they were in September 2021, right after the incentives began, and they've stabilized within that range of 130,000 to 250,000 per day, which is still relatively high compared to other smart contract blockchains. Active addresses actually have held up even better. So that means essentially there are less active addresses, but relatively more than the number of transactions. So they're down 65% year to date, but there's twice as much as they were in September. This is, I would argue, positive development, since there are more users. Theoretically, of course, one address does not necessarily equal a user, but it does show more activity being spread out within multiple addresses, whereas in August of last year, for instance, it was just a few hundred addresses. Now it's multiple tens of thousands In some cases, it's been up to 100,000. And for those wondering, this was an airdrop that, of course, triggered a lot of active addresses activity. In terms of holders, the amount of addresses holding Avalanche, which has been increasing significantly. So it actually just reached the milestone of 2.5 million addresses. It's up 5x from a year ago. Again, this could not necessarily mean that users are up 5x or holders are up 5x, but it does show a general perspective of that, since it can be tedious to manage multiple addresses, but theoretically one person can have more than one address. In terms of profitability, for the AVAX token itself, it's not faring so great. To say the least, 97% of addresses are losing on paper, so unrealized losses on their positions. So this is, of course, one of IntoTheBlock's most popular indicators, where we look at the price where they received the token, so the AVAX token, versus the price that they have it now, that it's at now. So we can see a very large size of addresses had bought between $13 to $17, which are realizing mild losses. But of course, those that bought near the top in November are 90% down or so. And so we show this by addresses and also by volume, so by the total amount of tokens. And it's worth contrasting that amount of volume profiting is slightly lower, which could be probably because of the ICO, where a lot of addresses bought at lower prices, so within these ranges. Now, finally, I want to talk about the ecosystem that's developing in Avalanche. So I'd like to say that smart contract platforms are close to new digital economies that are emerging, so almost like digital nations. So there are multiple industries within that. The few that have flourished the most are finance. So we see decentralized finance has been doing quite well throughout, I guess, crypto in general, but also specifically within Avalanche. Art and collectibles has been, of course, a very big industry within crypto, and that's best represented through NFTs and the volume that they gather. And finally, to a certain extent, gaming has also grown significantly. Within Avalanche, we see it's taken off, of course, a bit more in 2021, but to a certain degree, it's still held up a lot of that growth. So it has 250 applications at the moment, as per DeFi Llama, $800 million in total value locked across all of these protocols, down from 12 billion, but in line. I guess it's held up actually slightly better than other smart contract platforms like Solana. All-time NFT volume is about 400 million, and it's got 20,000 at the moment currently monthly active addresses using the GameFi applications, amongst them DeFi Kingdoms, the one with the largest users. I do have a question in the Q&A. Someone is saying there is no voice. I'm guessing that there is, that most people can hear me. If not, I would have received the message by now. But I'll continue. I hope it's a issue on your end, and my team can clarify if that's the case. But I see my microphone moving, so I assume it's working. In terms of DeFi applications, the largest right now by users and total value locked is Aave. So Aave, of course, is initially from Ethereum, and in their V3, they launched in multiple blockchains, such as Avalanche, also Phantom and Harmony, even though those versions are discontinued, and in layer 2s. Avalanche AVV2 actually also launched on Avalanche, but before that, even Benki was the main lending protocol. So they're a DeFi, an Avalanche native DeFi protocol. They were the first to kick off the incentive program with Avalanche, so that saw them grow parabolically from $0 in TVL to about 2 billion within just a couple of months. It held up around that level. So even in Q1 and Q2, as I mentioned, it was like the broader ecosystem, it was holding up quite well. But then in May, it saw a very drastic downturn. Nonetheless, it still is within the top 40 protocols in terms of total value locked, with $130 million in TVL. I'm seeing that the audio issues have been solved, so happy to hear that. They also, Benki, have liquid staking services. So they have about 18,000 holders of the SAVAX token, and there's about 6 million AVAX being staked through them, so roughly 2% of circulating supply, and has been growing steadily over time. It's also been integrated into Benki, which can be used to borrow against it, as well as in Aave or in Trader Joe, for those who are looking to provide liquidity in the AVAX pool. It's also a good way to get market neutral yields on AVAX tokens. In terms of the key token itself, so Benki's governance token has about 18,000 holders. It's increased year over year. Then there is the second largest Avalanche native protocol is Trader Joe. They started as a decentralized exchange. It's themed, I guess, kind of like a video game, and it got a lot of traction back in 2021. Then they expanded into Banker Joe, their lending protocol, and more recently they launched NFTs, or at least it's been announced. They still have about $75 million in TVL, and the amount of holders has been holding steady, increasing slightly throughout the year, with about 55,000 holders. I did have a conclusion slide. Oh Lord, I had a slide with some conclusions, and for some reason I think I might have deleted accidentally. So I'll just go from scratch. Basically, the Avalanche architecture is differentiated from other smart contract platforms. As we can see, with several metrics, there's been a decline in 2022. This is not just for Avalanche, of course. It's applied to Ethereum, Bitcoin. Pretty much all crypto assets are seeing a decline in on-chain activity. All in all, the amount of active addresses have actually increased relative to a year ago, which is a potentially positive sign. The amount of holders as well could potentially signal that there's interest, still increasing interest in the token, regardless of price action. The ecosystem continues to grow in certain regards, so such as liquid staking. With GameFi, DeFi Kingdoms has also grown to about 15,000 monthly active addresses, 20,000 for the whole ecosystem. They're pushing in that regard. And there's also some upgrades from the Avalanche Foundation that have been happening through the year and later next year to continue to push Avalanche forward. So that's it for today, guys. Thanks for tuning in.